On June 18, 2025, the world turned its attention to Sweden's central bank, the Riksbank, as speculation swirled around its monetary policy. The air was charged with anticipation, with economists, investors, and households alike searching for signals that could shape the nation's economic future. Interest rates, seemingly just numbers on a page, hold the power to influence everything from the price of groceries to the value of the Swedish krona. Against this backdrop, many wondered, would the Riksbank make a decisive move to lower its policy rate by another 0.25%? To understand the significance of such a decision, it's important to look back at the economic context leading up to June 2025. In the preceding months, Sweden's economy faced both challenges and opportunities. Global uncertainties, from shifting trade policies to geopolitical tensions, cast a long shadow over Europe. At home, Swedes managed the pressures of rising living costs, fluctuating consumer confidence, and an ever-evolving job market. Through it all, the Riksbank's mission remained clear: maintain price stability, support sustainable economic growth, and ensure the smooth functioning of the financial system. Earlier in December 2024, and again in January 2025, the Riksbank had already taken steps to support the economy. By lowering the policy rate first to 2.5% and then to 2.25%, policymakers aim to ease financial conditions and encourage both consumer spending and business investment. These moves reflected a careful balancing act, stimulating the economy just enough to foster growth without letting inflation spiral out of control. In the months that followed, the central bank signaled a cautious approach to future rate cuts. Every decision was weighed against an array of complex factors: inflation trends, the pace of economic recovery, the strength of the Swedish krona, and developments in global markets. As spring gave way to summer in 2025, the debate intensified. Would slower-than-expected growth tip the scales in favor of another rate reduction? Or would lingering concerns about inflation and external shocks prompt the Riksbank to hold steady? By mid-June, the spotlight was firmly on the Riksbank's policy meeting. A 0.25% cut, if enacted, would be more than just a technical adjustment. It would send a clear message about the central bank's assessment of the Swedish economy's trajectory. For households with variable-rate mortgages, a reduction in the policy rate could mean lower monthly payments and a little more breathing room in their budgets. For businesses, cheaper borrowing costs might translate into new investments, expansions, and hiring. And for investors, the move could influence everything from the stock market to the direction of the krona. However, as of June 18, 2025, no official announcement confirmed a new 0.25% rate cut. The central bank maintained its stance of caution, emphasizing the importance of monitoring fresh data and global developments before making further changes. The absence of a rate cut was a reminder of the delicate balance the Riksbank must strike. Acting too quickly could stoke inflationary pressures, while waiting too long might risk stifling economic momentum. But what if the Riksbank had moved forward with a cut? The immediate effects would ripple through the Swedish economy. Lower interest rates typically make borrowing cheaper and saving less attractive, nudging people to spend and invest rather than keep money parked in the bank. This increased activity helps businesses grow, creates jobs, and supports higher wages. Over time, as demand rises, companies may raise prices, nudging inflation closer to the central bank's target. Yet, monetary policy is never a one-way street. A rate cut also carries risks. If inflationary pressures are already building, easier monetary conditions could push prices higher than desired, eroding purchasing power and triggering calls for future rate hikes. Moreover, the value of the krona could weaken, making imports more expensive and further fueling inflation. Policymakers must also consider the broader landscape, how their decisions interact with those made by other central banks, such as the European Central Bank or the U.S. Federal Reserve, and how global shocks might reverberate through Sweden's open economy. The Riksbank's cautious approach underscores the complexity of these decisions. It is not enough to react to the latest data. Policymakers must anticipate future trends, adjust to new risks, and communicate clearly with the public. This transparency helps anchor expectations, ensuring that households and businesses can plan with confidence. For ordinary Swedes, the policy rate may seem remote, but its impact is felt in everyday life. Mortgage holders track their monthly repayments as rates shift. Savers weigh the returns on their deposits. Entrepreneurs consider whether now is the right time to launch a new venture or expand their operations. Even those with no direct loans or investments are affected, as interest rates influence everything from job prospects to the cost of living. The Riksbank's decisions are also closely watched by international observers. Sweden's reputation for prudent economic management and transparent policymaking sets a standard for other nations. When the Riksbank acts, global markets listen, adjusting their expectations for currency moves, bond yields, and capital flows. Looking ahead, the Riksbank has made it clear that its policy path depends on evolving conditions. If inflation remains subdued and economic growth stalls, further rate cuts could be on the table. Conversely, if global shocks ease and confidence returns, the central bank might hold rates steady or even consider future increases. The key is flexibility, responding to the data, not to headlines or speculation. In summary, while June 18, 2025 did not bring a new rate cut, the Riksbank's role remains as vital as ever. Its careful stewardship of monetary policy helps to anchor Sweden's economic stability, providing a foundation for prosperity in uncertain times. As the economic landscape continues to shift, Swedes can count on their central bank to weigh every decision with diligence, transparency, and a steadfast commitment to the public good. Whether rates rise, fall, or hold steady, the Riksbank's actions will shape the nation's economic journey for months and years to come.